Welcome to Fitz Factor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
I think the Fed is kind of, people know this, but they just, and there's no other way to do it. But they know this, but they keep hoping otherwise. The Fed's operating on a combination of latent data. That's the only data that they can operate on. If it's not latent, then it's not data. But they're operating on a combination of latent data and the force. That's it. And so they're doing the best they can. And so the market's always trying to lead the Fed. And it used to be in days gone by where the consensus was, at least the stated consensus was, the Fed controls interest rates. And it used to be the case that absolutely wasn't true. It was the bond market that controlled rates. The bond market basically told the Fed what to do, because if the Fed didn't do that, they would look foolish, because the bond market was the dominant. I mean, bond market is interest rates. Fixed income. But since the advent of zero interest rates, the ZIRP, zero interest rate policy with Bernanke and the big market correction, the Fed has essentially flipped that. And now it's the Fed that's in charge. And it does kind of suck in a way being the leader on something like this, because number one, you're going to get it wrong on occasion. That's just the nature of what this is. But also, because of the nature of markets, you're going to get a lot of front running, a lot of prospective buying or selling, a lot of positioning ahead of what? Seriously, if the Fed doesn't know quite what they're going to do, like all the mixed signals over the weekend, I saw those too. Powell says, we're not going to raise rates in March, or lowering rates, but we anticipate lowering them like three times. Like 3 times we're going to get a cut. But it's probably not going to be as soon as you think. And then somebody comes out later on the Fed and says, yeah, but you know what? March isn't off the table. And so you've got the market saying, well, what is true? And the answer is, we don't know. Nobody knows. The Fed doesn't know. So that's why we're going to get this constant flow of conflicting information. And the only thing that you can do if you want to be doing the right thing is just say, you know what? Markets go up, markets go down. Nobody really knows for sure. And if I'm describing the wall of worry, isn't everything that I just said part of that wall of worry? And so as long as the market's going up, you need to be focused on having a bullish bias. And I would even say, as long as the market's going down, you need to have a bullish bias, but just not now. Like, you need to be sitting there waiting. It's a very difficult trading strategy to make your money shorting stocks. It is. I won't say it can't be done. I'll just say that you're not really going to hear of any kind of money manager or big fund that is crushing it on their shorts. Like, that didn't even happen during the internet bubble, because the market on the way down is so stinking volatile that even dedicated short sellers wind up having to cover their shorts all the time because of the big counter moves. So just like, guys, let's just stick with the trend. Okay. Now,
and, to your point as well, I remember Stanley Druckenmiller talking about how he was trying to short the .com bubble and missed it, and so even people, if Druck can't do it correctly, what makes you think that I can? You know what I mean? That's what I think, at least. So I typically will be, long bias trader. People ask me about shorting all the time, and I'm just like, not what I'm good at and not what I've made most of my money doing. Yeah. So if I've made most of my money doing, why not focus on just getting really good at doing that thing that does make me money? It can be very enticing to see some people online. There's some people who are always trying to call the top and bearish tweets. Dan, I don't know if you've noticed this. They get a ton of engagement. I got this guy, trader, he's in Alberta here in Canada, and he is trying to call the top. He's been calling the top on SPY at least every 3 weeks of like, this is it, guys, ready for the big pullback. And it gets hundreds of thousands of views, tons of engagement, and he hasn't been right yet. And I'm just like, keep that in mind. The market it's rigged to go higher. The government wants the market to go higher. Everyone wants the market to go higher. So why fight that? Why not just be on that side? And to your point as well, Dan, follow that trend.
Yeah, that's
up.
right. And the thing is, like these people, I remember Doug Cass. I don't know if he's still around. I'm sure he is somewhere, but I don't know where it is. And don't tell me. Couldn't care less. But Doug was always the guy that would be talking about that, the market's up, I'm shorting, I'm shorting. And each time, if you're tracking it exactly where he was shorting, you're going like, I don't think this guy has enough money other than to be trading what's in his kid's piggy bank. I mean, he's getting killed. Then ultimately, when the market does turn, he's crowing and going, see, I told you. And the idea is that everybody forgets about the previous calls that you made. And I'm not really dogging on Doug Cass, although I really am. It's just like, that's the nature of making these big sweeping market calls, is you're right every once in a while and you get a lot of press for it. But what's happened is people along the way that have followed you have lost a lot of money. And so by the time you're right, those people don't really care. They're mad at you. That's one of the many reasons why I always tell people, look, I'm trying to help you guys, and I know Scott is too, by sharing certainly what we think about the market, sharing with you what we think, what we're doing, what we know. But ultimately, you have to take that stuff and apply it to your own trading. Trading is hard. Trading itself isn't hard. I said that a lot. Trading itself is not hard. You learn a couple patterns. You learn how stocks act. You learn about money management, position size, risk management, and stuff like that, and you're good. Just do that. It's super, super easy. The problem is that the mind gets in the way. There's so many, and by the way, trading may be easy, but that doesn't mean you can learn it quickly. But the problem doesn't lie in our theory and what we know. The problem lies in what we do. And what we do is often way different than what we know we should do.
If you're getting value from this podcast, click the subscribe button and sign up for Dan's free daily videos at stockmarketmentor.com.
You got to keep that in mind. And as I say this, all the different people that are listening to me all trade a little bit differently. And so you got to understand that. There was some idiot, I forget his name. I don't know if he's an idiot because I haven't seen him, but he sure looks silly. The guy that his whole publicity, at least that I've seen, is he'll create an inverse ETF on somebody, like he's done it with Cathie Wood. And I'm sure, in fact, I read an article, his timing was impeccable because he created this like right when the market turned over. And so right when all these speculative stocks that ARK was in started falling. And so he gets all this publicity. Oh, awesome. Good for you. And then he does the same thing on Kramer. Don't get me wrong. I'm not defending Kramer. I've told you guys many times, I think the guy's wrong a lot. But here's the deal. And this really gets to a personal, not for me, I couldn't care less, but it gets to a personal level as well as a financial level. A guy creates an inverse Kramer ETF. And of course, everybody who doesn't like Kramer or laughs at him and this and that, they're jumping on the bandwagon. Well, are they really? No, because that trading volume on that ETF sucked. So the only guy that was making any money on it was this guy, because there's no evidence that he was even trading it. He probably wasn't, but he sure collects the fees. Why do you think there are so many ETFs? because the companies that issue ETFs, they get the slippage, they get the VIG. And so what this guy did was put on this ETF. And I tweeted, we had a short exchange, but then I don't know if he blocked me or muted me or just said, I can't handle this guy because I don't like him. But he said that and I'm talking to you, the whole reason why he did that was to prove that it's silly to follow somebody on television. So here's a guy whose underlying motivation is to prove something about the market. And how do you prove that going against Kramer is profitable? Because Kramer, if you go ahead and do the count, how many stocks does Kramer talk about today on any given trade? Buy, and all his other stuff. So if you're trying to figure out Kramer's, quote, performance, are you taking only those into account? I mean, are you taking everything into account or only those stocks like he'll do with me today, or if he interviews some CEO, stuff like that? How do you do that? The bottom line is you don't, and nobody knows how this buffoon was doing that, but he finally had to close the fund. And he told me he was right and making money all the way up, literally, because we were short NVIDIA. And I'm thinking maybe Kramer one time said, no, you don't want to buy NVIDIA here. But this guy's been bullish on NVIDIA for years, literally for years. So my point is, what you think, what you say is totally different than what you do. And it is silly to follow somebody on TV. It's silly just to follow me or Scott and do only make trades that are on the active trade list. You do it. I know a lot of people do it. And my goal is, of course, to help you make money. But what if I die tomorrow? What if Scott decides he didn't like me anymore? What if the business closes down? Then are you back to square one? I hope not. So you got to be taking advantage of this resource and taking advantage of your own intellect and also focusing more on what you are actually doing, not what you know you should do. Because if you parse the two of them together, you will find they are not in sync. There's an inverse correlation to that.
Great stuff, Dan. And, I've said this before. I don't agree with everything Jim Kramer says, but the guy's on television for nearly 4 hours a day, four live hours a day. He's got to talk about stocks for 4 hours a day. Of course, he's going to be wrong a lot, just like we would be wrong a lot, or anyone else who had to have an opinion with knowing, 3 things about a stock or about a company or about crypto or Bitcoin or whatever. So I think it's an impossible job. And, I just looked at SJIM, which is that short vehicle that you mentioned, popped up for a couple of days and then dropped 25%, so yeah. Okay. It's funny to look at that inverse Kramer Twitter account, calling out all his bad trades. But if you actually tried to track the money, you ended up losing money anyway. So it's a no-win situation.
Yeah, it is. It's a no-win situation. I wouldn't want Kramer's job. I don't like doing TV at all. It's a pain in the butt, to tell you the truth. And it's not like I like teaching live classes. I mean, online is great, but in person, like having a big workshop, a big conference or something, that is totally fun. I love it. It energizes me for a while. Then by the end of the day, I just want to go into my room and watch TV with the volume down and a cocktail in my hand, or 2 at a time. But with respect to TV, you're sitting in a studio. If you're on set, then it's bright and all that. But there's nobody looking at you other than the cameras. And it takes all this prep. If you're in the studio like remote, then it's even worse. Then the camera is just set. There's nobody even operating the camera. And it's really dark in there. And you're talking to a light, because you can't even see the TV because there's a delay, just in case you say something that they need to bleep out. It's never happened to me, which is remarkable. But that's the way it is. So the bottom line is doing TV ain't the funnest thing in the world, but I'll go on and I'll make one call or two calls. I can't imagine I can't imagine being on there as much as Kramer is. Like that is to me hard time. But the point is, again, if you're following just me, if you're following just Scott, one thing's for sure, you're never going to lose a lot of money because we always focus on protecting yourself. It's really important that you do that. So as I really think about it, go ahead and just follow me or go ahead and just follow Scott. I almost guarantee you'll underperform the market if that's all you do, because we miss out on good trades all the time. And sometimes when the market's really, really screaming, we may be in the right stocks, but does that mean that we say, hey, you got to go all in on this? No, that kind of stuff's it's totally your decision to make, nobody else's.
Dan, we just got a comment from Vincent. He says, the brutal honesty is probably a big reason I always renew my membership to Stock Market Mentor. Don't get this anywhere else. Thank you.
Oh, well, that's really nice. That's really nice to hear. As people know, I'm really candid. Sometimes, especially in this day and age when you can't really have honest debate or an exchange of ideas, because that's just not where we are right now. There's no middle. And so I can be pretty candid about things. And I decided over a decade ago, I can't be somebody that I'm not. But part of that is that I believe that every single trader in existence will ultimately find to be true the things that I'm telling them. The problem is that is a horrible business model for me. Vincent, I'm glad you get it, and I'm glad you're still a member. Thank you. But it's a horrible business model because what I'm not doing is I'm not selling hope. And that is this business. This business, if I'm a drug dealer and I'm selling vitamin C, that's not good for business unless that vitamin C is vitamin cocaine. And that's what people tend to do in my business. They want to suck you in. They want to get you filled with hope. And then over time, as your performance is not keeping up with the hope and with not keeping up with that magic guru who seems to only be making money on every single trade, you keep thinking that it's you, that you just need to be, oh, I'm so bad and this and that, I'm not doing it. And no, it's because you've been filled with hope. When you're hopeful, you never change anything. Like that's the nature of hope. The nature of hope is if I just keep doing the same thing that I'm doing now, hopefully things will turn around. And you know what the definition of insanity is. Everybody knows that, doing the same thing all the time and expecting something different. But that's what my business is. Getting you to always expect something different. And you just keep putting the money in the slot machine. And ultimately, it's going to pay off. What I'm telling you is, if you just keep putting money in the slot machine, it's never going to pay off. What you got to be doing is putting money in yourself. And you got to be putting money into thinking and improving and looking at yourself. That's your stock. That's your long-term position, is yourself. It doesn't have a ticker. It has a social security number. And so if you're thinking about trading along those lines, I promise you that ultimately you're going to succeed. Promise you that if that's the way you're approaching trading, because you can't fail if you're just always focusing on improving. And I'll say this, if you get caught in a rut, that's fine. That's part of the deal. But if you start losing a lot of money, I will say this, you've lost your focus. So you got to get it back. And that's the ugly truth, I guess. So I'm kind of putting it on you, not back on you, like it should have never been on me or Scott in the first place. This is all about you improving your trading performance. It's not about me or Scott. improving your trading performance. We're a resource for you to rely on. You're going to get honesty. You're going to get our best efforts. You're not going to get perfection. And you're not going to be perfection. I was talking to somebody over the weekend about trading, and I said, no golfer on the planet shoots 18. Nobody has a round of golf at 18, unless they really cheat. But that's because golf is a series of misses. Trading is a series of misses too. The best golfers, though, manage their risk. They don't generally hit it into the beach or into the forest or into the water. They keep it in play. And that's what I'm telling you to do. If you can keep it in play, then ultimately your game's going to improve, and you're not always thinking about buying new clubs. The clubs that you have are just fine. It's just that you suck. So go to the driving range. Don't go to the golf store. And that's what I'm telling you about trading. Go to the driving range. Like, focus on what you're doing as opposed to what somebody's telling you to do. So you'll always get that stuff here. Sorry if I burst any bubbles. Not sorry.
Thanks for listening to Fitz Factor with Dan Fitzpatrick. If you like this, then you'll love Dan's premium service at stockmarketmentor.com, where you can learn how to trade stocks, options, and cryptocurrencies. Click the link below and get access to real-time trading alerts, a community of traders just like you, and live training sessions each week. Get the trading edge that you need at stockmarketmentor.com.